Hi, my name is Professor Deanna Martin, and we're going to talk about the first 4 steps of the accounting cycle. The first 3 are the recording process: analyze, journalize, and post. We did a whole separate video on analyzing a transaction. I'll rewrite that for you right here. Your basic analysis, equation analysis, and debit credit analysis were the 3 parts of analyzing a transaction. That's all the stuff that we covered in our Analyze the Transaction video. Now we're going to focus on journalize and post, and then lastly we're going to make a trial balance. So after the first step, you've done all the thinking part, and now you're going to write this into a journal entry. You're going to journalize into a journal by creating a journal entry. The format for a journal will be a column for date, a column for account and explanation, column for debit, and column for credit. Let's say the first transaction was on October 1st, and you were given the information that you sold stock for $10,000. You would put the date in the date column as given. Then you need to think through what are the accounts, amounts, increases. You determine that cash is the account. Your debited account will be first, which happens to be cash. Cash is increased, it's right here. Cash will be debited. So you're going to start typing cash in the type ahead technology. As soon as you type a C, you'll see cash and common stock both come up. Cash is what you're going to click on. Now you can type it, but if you have any misspellings, you'll get it wrong. So my recommendation is to click on it when it comes up. Don't do this on your phone. Do this on a laptop. Cash is your first account, and then the amount is going to be here, $10,000. You're going to leave this one blank. And the second account is common stock. The second account is credited in this case, and as soon as you put a number over here, the computer system will automatically indent that. You're not going to indent it. Don't put space, space, space. Just start typing common stock. I'm going to leave some space because that's what the final result will look like. Do not abbreviate. I'm doing that here to save some space. And then you'll type in 10,000, comma is not necessary but recommended, so you don't goof up and not tell if you have 3 zeros or 4 zeros. So you're going to start typing that in. As soon as you leave that space, this is going to automatically indent in the system. Now the explanation, you do not have to type in because there are a lot of ways to say this. In the real world, we would do that, but when you're typing this in our system, you're not going to be able to get graded on that, so that will be omitted in all the explanations. That's your first journal entry. Now let's say on October 2nd, you needed some more money. So you went to the bank on October 2nd and you got a loan for $5,000. You would input the date in the date column as given. You'll think through the accounts, the amounts, the increases, decreases, also determining the debit and the credit. So the accounts are cash and notes payable. Cash is going to be the debit. We're going to put that first, just like the first transaction. The amount is $5,000. We're going to type that in here. We're going to leave the credit column blank. The other account is notes payable. I'm going to abbreviate. Do not do that in the system because you'll get it wrong. I'm doing that to save on space. Leave this spot blank, and then you're going to type 5,000 in the credit column. My explanation will be omitted for you. We're just going to say we borrowed $5,000. Then the next transaction, let's say you want to buy some equipment, and it's going to be for cash. If it doesn't say on account, you can assume it's cash. If it says on account, either accounts receivable or accounts payable would be appropriate. If we bought the equipment on account, it would be accounts payable or notes payable, depending on the circumstances. But if you don't see the phrase on account, then it is for cash. Let's record that. Let's say it's October 3rd, the given date. You have to always ask yourself if cash is involved. Yes, it is. So the accounts and the amounts in this one is going to be cash and equipment. Cash is going to go down, so we're right here. We're going to credit cash. So I'm going to leave this one blank, because I want to put cash in the second one. It's going to be automatically indented. Let's say it was $2,000. So you can automatically indent it as soon as I type the number in there. The other account is equipment. Well, right here, that's going to be debited. So I'm going to put that on my first spot. Don't abbreviate. Once again, I'm doing that just to save some space. That amount is $2,000, and I'm going to put that in the debit column. My description is going to say purchased equipment. So there's just 3 simple transactions, and now you can see what it looks like when we put it into a journal entry. Now we're going to post the transactions. Posting is going to be in the ledger. We're going to use T accounts to represent the ledger, which is just a small portion of the ledger. I'm going to go ahead and post all of these transactions. So this first transaction, it's just going to be copy paste. I need to go copy to the cash account. So let's create a little T account for cash. And I'm going to just copy the debit right here, debit on the left, credit on the right. I'm going to put in 10,000. And I need a common stock account. I'll make a little T account for my common stock, just abbreviating that one. And I'm going to copy paste this credit over here, debit on on the left, credit on the right, 10,000. You sometimes will be asked to refer to a date, and so I would be putting the date, let's say right there. I'm just going to put a little box there because I don't have space for that, but I would be filling that in right next to it as well. For the second transaction, I'm just going to copy and paste this 5,000. For cash, it's debited 5,000. I'm going to put that right here in my T account, and I'm going to put a pretend little date over here. I just don't have any space, so it would say October 2nd. And then for notes payable, I need to credit it for 5,000. Let's make a little notes payable T account. This would be already set up for you. You just need to fill in the boxes. This is going to be on the credit side for 5,000. Now let's go ahead and post this transaction. We need an equipment T account. Needs to be debited for 2,000. And then we need a credit cash for 2,000. Put this in this top box right here. And now all three of those transactions are posted. I'm going to put a little box to represent a date here for all of these in case it's being asked for. That's where it would go. I just don't have space to write it in there. So that's posting. You've posted to the ledger. These T accounts represent the two accounts that would be the debit and credit columns in your ledger. Let's go ahead and finish this off with the last thing that you're going to do, which is not part of the recording process, but it is the fourth step in the accounting cycle. That is, you're going to create a trial balance. The trial balance does not have a column labeled account, but I'm going to do that just so you can see what it would look like and it makes sense when you can see it together. Then it would have a debit column and it would have a credit column. This one will not be labeled, but you'll need to list the accounts in the order of liquidity with the assets, then liabilities throughout your balance sheet, then your retained earnings statement, then your income statement. So this is what's called in general ledger order. We're going to start off with our assets. We only have cash and equipment, and the order of liquidity means cash goes first, then equipment. So let's go ahead and list cash and then equipment. And we need to put the balance of those accounts. So this cash account, we're going to balance this out. 10 plus 5 is 15 minus 2 is a balance of 13,000. I'm going to copy and paste that right down here into my debit column. And then my equipment account just has this $2,000 balance in the debit column. And then next comes liabilities. I've got one liability, notes payable. I'm going to put that in here. And that has a balance of $5,000 as a credit. And then my last account is common stock, and that has a balance of $10,000 credit. And now I'm going to add up my debit column and my credit column, and I'm hoping that they're going to balance. 13 plus 2 is 15,000. 5 plus 10 is 15,000. And yay, they balance. 15,000 equals 15,000. Debits equal credits. And that balance is why we call this the trial balance. I hope this all helps you figure out how to analyze, journalize, post, and then prepare a trial balance. Thanks for watching.